Good afternoon, everyone. Again, this is David Milan here, Director of Investor Relations at Nighthawk. Thanks for tuning in. I have Drew Niffin here, President of Nighthawk. Today, we're going to talk about the three unique traits that set Nighthawk apart. One of the most important things that you can ask yourself as a real estate investor, researching different syndications, is what sets this syndicator apart from the rest. So as a syndicator, you should be able to point out a few aspects of your firm and say, this gives us a unique advantage over other firms in our industry. Drew, I'll hand it over to you. What's kind of the main thing, in your opinion, that makes Nighthawk unique?
Hey, David, good question, and super important question for every investor to think about as they look at all the different options that they have for people to trust with their resources. They spend a lot of time and energy putting together. To answer your question, I really think that Nighthawk does a great job on a few things. The first one that I'll just share is communication. We take a lot of pride in communicating thoroughly, and accurately and in a timely way to our investors. So our reports, our monthly reports, get into investors' inboxes every month, and they're going to come with a lot of information. So they're going to come with a narrative, a description. What happened at your property in the last month? We want to make that a really easy to understand communication that's very thorough and very honest. We're going to have things like an actual to budget variance. So it's going to say, hey, we expected to get this much in revenues and this much expenses in the month, and this is what actually happened. And we'll explain why and where there's variances. And every month there'll be an update on your distributions. So we still plan on sending out your money next month or at the end of the quarter, or things still look strong from that perspective. Because I know from talking to investors, at the end of the day, that's really the bottom line is, am I still going to get my distribution? That's what people want to know. So we're going to communicate that to you monthly. And then also, David, you and I really pride ourselves on our timely responses. If an investor reaches out to you or me, we're gonna respond as soon as possible. Almost always within 24 hours, and honestly, most of the time within 1 hour. And our personal phone numbers, our personal cell numbers are on our report. So we're freely available to answer any question, from a strategic question about how's the asset doing to a logistics question of how do I update my bank account number. And so that communication, I would say, is the first thing that I'm really proud to do a great job on and provide comfort for our investors that we're going to be there for them.
Yeah, absolutely. I think communication is definitely the first thing that comes to mind as well. It's something that we kind of take pride in. So that would be number one for me as well, for all the reasons you listed. Now, another aspect that comes to mind immediately is our underwriting style that kind of sets us apart. Could you elaborate on that? What makes Nighthawk's underwriting style unique, and why is this so important for an investor to consider?
Yeah, absolutely. So the underwriting, that's our fancy way of saying, when we look at a deal, how do we have the highest degree of confidence that it's going to perform at the level that we expect it to? We want to build in some comfort so that if things go different, there's still room for the property to perform. And so here's a couple things that we do. Number one, we expect in our analysis for the cap rates of deals to move away from us. So we expect that when we ultimately sell this apartment building in 5 to 7 years, the market is in a way a little bit softer. We do that through having a 50 basis point increase in the expected cap rate at sale. And so that can get a little bit technical, but basically we're assuming that the market gets softer, and we build that into the model so that if and when that does happen, we still have room. Another thing that we do is in our modeling, we every single month put away a little bit of money in a rainy day fund. So we have money for unexpected things, whether it's a large insurance claim, whether it's a new roof, whether it's upgrading the units. We put aside money for those things so that we have funds, not just for the everyday expenses, but the big ticket items. We also do things like, even if we expect to spend $1 million on capital expenditures or upgrades in a property, we'll set aside 1.5. We call that a CapEx reserve. One thing that I know is that in every single deal, no matter how precise you try to be before you acquire it, there's always things that come up. And so we have funds set aside for those. And the last thing I'll mention, David, is, in the last year during COVID, it's been a turbulent year. And so on all of our modeling, we've modeled in, even though we're in growth markets, we're modeling 0% rent growth for the first year of ownership because of the turbulence in COVID. So we're not assuming that times are going to be exactly how they were in the past, because we've gone through this really traumatic experience as a country and as a world. The organic rent growth in year one, we've zeroed out So those are some of the things that we do to try to make sure that this is a good deal and that we can meet our expectations for our investors.
Right. And Drew, to piggyback off that a little bit, I'd like to think this kind of goes hand in hand with conservative underwriting, but obviously having a strong track record is very, very important. So could you talk to us a little bit about how Nighthawk's track record is a plus?
We've owned 16 apartment building complexes so far. To this date, we've never lost an investor dollar, and we've never had a capital call. So we've never come back to investors and said, hey, could you send back in your money? We don't have enough money to do X, Y, or Z. So that's never happened. More fully to answer your question, one of our properties, this is an example of a project that's overperformed the expectations. As a property we bought in December of 19, and we forecasted, or we modeled, that in the first 2 years of ownership, we could raise rents $70 in year one and $70 in year two. So a total of $140 over 24 months. This property has just phenomenally outperformed that. The rents that we've gotten within year one have been $198, so almost $200. So well in advance of what we modeled. And that kind of goes back to what I was saying before about the conservative underwriting. And so that's been a fantastic win. We've gotten unsolicited offers to buy that property at just amazing prices. And we've turned it down because we still believe in that market. We believe in the growth in it. We believe we can sort of outperform those offers by continuing to invest in that property and make it better for our tenants, for the community, and for our investors. So that's just one more example of that conservative underwriting coming into play to benefit our investors.
Really fantastic answers, Drew. One thing I want to leave you guys with, if you want to discover for yourself, what makes Nighthawk so unique, make sure you're on our Deal Ready investor list to receive communication about upcoming deals by signing up for a phone conversation with me by using the link at nighthawkequity.com and clicking the join button and booking a call with me. Looking forward to speaking with all of you. Thanks for tuning in, and we'll see you next time.